Every business out there, no matter how big or small it is, has two main components as a foundation. These are the assets and liabilities of its balance sheet. Equity of the shareholders is the third component of that balance sheet. How are equity, liabilities, and assets associated together? This is where the accounting equation comes into play, and this is what today's video is about. So let's jump right in to understand what the accounting equation is and what is its basic formula. The accounting equation will help you evaluate if the transactions made within your business are reflected in your company's books accurately. Before giving you the formula of the accounting equation, let us go over the three main components of the balance sheets that make up the formula. Assets. There are different kinds of assets for your business. Liquid assets are cash and other things that can be used as cash, such as treasury bills and certificates of deposit, are considered assets. Accounts receivables are a list of how much money customers owe the company for buying its products. The stock you have in your company is also part of your assets. Most companies' main and often most valuable assets are the machinery they buy and the property they are located in. These are things that can't be moved and are usually kept for a long time. Liabilities. The business's liabilities consist of its outstanding debts and the operating expenses that must be covered. Long-term loans and overdue bills both constitute debt, which is also part of the company's liability. Mortgage or rent payments, tax payments, utility bills, employee salaries and earnings, and dividends all fall under the liabilities. Equity. Net assets are calculated by deducting assets from liabilities, giving you the shareholders' equity figure. It's the sum of money that would be left after paying off a company's debts and selling off its assets if the company went bankrupt. The stockholders would then receive this sum as a dividend. Shareholders' equity includes retained earnings. Additionally, the profits that were not distributed to shareholders as dividends amount to this figure. To simplify, retained earnings are the sum of a company's profits that have been set aside for use later. Accounting equation formula. Assets equals liabilities plus equity. Within the balance, you will find that all you need to create this accounting equation. You can first find the total assets of your company, the total of all liabilities, and the total shareholders' equity. You add the liabilities to the equity and you'll get the sum total of all assets. Every transaction that is made within your company needs to be recorded in at least two accounts to keep your accounting equation correct. So if your business took out a loan, the funds would be added to the assets and simultaneously added to the liabilities as a loan. So make sure you always check on the financial well-being of your business by applying the accounting equation, as it would help you determine if your books are accurate. Share with us in the comments if you've tried the formula and if your books are accurate. Don't forget to like this video and subscribe to the channel for more content. See you in the next one.